Firstly, with the equipment division, it was a strong overall performance on the back of strong growth in the mining sector and some significant contract awards, particularly in Southern Africa and in Russia. The Russian dealership acquisition delivered well ahead of expectation. I think all of you are aware we acquired the remaining 50% in the Russian Caterpillar business effective the 1st of October last year. The timing proved to be opportune and that delivered a strong result. We also saw market leadership gains across all of our equipment geographies, and I include here Southern Africa, Iberia and Russia. And that's very pleasing for us because that implants the installed population base of machinery, which is responsible for the long-term aftermarket parts and service revenues. We continue to make sizable investments in facility expansion across Southern Africa, and I'll talk to some of those investments later, as well as some significant facility investments in Russia. In Iberia, on the positive side, we won some significant contract awards, and I'll unpack the delivery timeframes for you on those later, notwithstanding the fact that the external environment continued to deteriorate. On the global power systems business, we've made significant investments and some good strides there this year, and that continues to gain traction. Moving on to our automotive and logistics division. The overall performance there was very pleasing in a competitive trading environment. The integration of our automotive and logistics businesses is progressing well. We made an acquisition of Avis Coach Charter and a fuel management business, which I think will deliver well into the year ahead. We also successfully concluded the sale of our loss-making logistics Middle East and Asia non-corporate trader business. That was finalized on the 28th of February, and the losses in the first half were therefore non-recurring in the second half. We received the final cash on the disposal of Car Rental Scandinavia in December this year. The pleasing thing about that was we were able to redeploy that cash out of a loss-making business and invest it into the Russian acquisition. On the handling front, we saw a substantial turnaround in business profitability from a small loss last year to a 72 million profit this year. We also successfully expanded our agriculture business into Russia and Mozambique. And while small startup losses were incurred in this financial period, that'll stand us in good stead for the future. And the SEM product range, which is a Caterpillar-owned subsidiary in China, manufacturing wheel loaders for the local market, grew very, very strongly, and we're presently expanding that business into Russia and Mozambique. It was very pleasing that with 50% growth in revenues this year, we exceeded our 2008 peak revenue levels, achieving 12.5 billion rands worth of revenue within the division. That translated into a 70% increase in operating profit to 1.2 billion rand, and very pleasingly, as Don mentioned, an expansion of our overall operating margin to just under the 10% level. That was driven by commodity-backed demand in mining and contract mining. We're seeing an increasing proportion of our deliveries into the mining sector actually happening via the contract mining channel as opposed to directly through mining houses. But also we had record product support revenues, and as you know, that's the foundation of the business model in terms of the after sales parts and service revenues, and that was driven by very high utilization of active mining machine populations.